CrowdStrike shares take a look, down almost 11%, getting slammed again. A host of Wall Street calls on the stock this morning. Not great. Dom Chu's here at Post 9 to bring things down for us. Dom.
What's interesting,
hello.
Sarah and Carl, is that a lot of the commentary, yes, is negative, and maybe we can understand what happened with the global IT outage, but it's not all. Some people are actually stepping back in and reiterating their buys. But just to kind of put things in context, with a 10% drop today, following up on that 11% drop that we saw on Friday, we now have roughly $18 billion worth of market cap lost on CrowdStrike in just 2 trading days alone.
Outage, valuation, sentiment. CrowdStrike will report its earnings on August 28th, which could be a pivotal moment for the cybersecurity company. Recent events, including a global IT outage and a significant drop in its stock price, have raised questions about its future. In this video, we'll break down what you need to know about CrowdStrike's performance, analysts' opinions, and the impact of recent disruptions. Will CrowdStrike bounce back from its recent setbacks, or should investors be cautious?
The global outage?
True, but JP Morgan says CrowdStrike delivering a masterclass on incident response. They like that one. UBS, short-term pain priced in, room for upside. How do you like that? And then Morgan Stanley has done key takeaways from global resellers. They like it.
Jim Cramer recently highlighted CrowdStrike Holdings as one of the 10 stocks to watch. In a recent episode of Squawk on the Street, Cramer compared today's global market interconnectedness to the dynamics of 1987. Back then, Japanese investors significantly impacted U.S. stocks, notably boosting sectors like waste management and railroads. Today's market shows an even tighter connection, with global movements affecting domestic stocks more than ever. Cramer noted that a weakening dollar enhances this global link, benefiting international companies such as Coca-Cola. He also observed a shift in investor behavior. Where investors once sought reasons to stay out of the market, they now seem to find optimism even in negative news. This shift is evident in how bad news is often met with hope for a rebound, pushing stock prices up despite challenges. Cramer pointed out an interesting observation about September, which is traditionally considered a tough month for markets. He remarked that focusing too much on this month's negative reputation often leads to unexpected outcomes. Despite expectations of a downturn, the market has shown significant gains recently, making last week's performance seem out of the ordinary. Meanwhile, Yahoo Finance has provided a comprehensive overview of how CrowdStrike Holdings stacks up among the stocks recommended by Jim Cramer. In evaluating CrowdStrike, they noted that it stands out with 69 hedge fund investors backing it, reflecting strong confidence in its market position. CrowdStrike is a leader in cloud-native endpoint security, offering its Falcon platform to protect against a range of cyber threats, such as malware, ransomware, and advanced persistent threats. The company's financial performance is robust, characterized by substantial revenue growth, high profitability, and a solid increase in subscription revenue. A growing customer base and expanding product offerings support this steady revenue stream. Recent updates from Jim Cramer highlight that Bernstein has lowered its price target for CrowdStrike from $381 to $315 per share. This adjustment comes ahead of the company's earnings report on August 28th. Analysts suggest that the recent global IT outage is unlikely to drastically affect CrowdStrike's customer retention. Although margins might experience a short-term dip, the company is expected to recover in the longer term. CrowdStrike's strong customer acquisition and retention, including contracts with major enterprises and government agencies, bolster its growth potential and investment appeal. The Carolina Eagle Mid-Cap Growth Fund's Q2 2024 investor letter points out that CrowdStrike reported impressive earnings, with notable growth in endpoint security, cloud security, vulnerability management, and identity protection. This performance is particularly significant given the increased cyber threat environment and the rising use of artificial intelligence, which could make cyber attacks more sophisticated. Despite CrowdStrike's strengths, it ranks 5th on Jim Cramer's list of the best stocks to buy.
If I was trading CrowdStrike, I would sell it, because that's the right thing to do.
You would sell it now?
If I was
Cramer,
trading,
by the way, called a bottom today on SOTS.
Okay. If I was trading CrowdStrike, I would sell it. That has nothing to do with doing a fundamental analysis of the company. It's based on what you're seeing in price action and the fact that generally, when you have these experiences like Chipotle did years ago, like Boeing has had the last several years, it takes time to recover. But I'm not trading these names. I said that to you when I bought this company. I said that to you when I also bought Palo Alto Network.
Another noteworthy update is that CrowdStrike Holdings has been drawing significant attention on Zacks.com recently. Over the past month, the company's shares have declined by 0.9%, while the Zacks S&P 500 Composite Index has risen by 1.8%. In contrast, the Zacks internet software industry, where CrowdStrike operates, has seen a 5.9% increase during the same period. This raises an important question: what direction might the stock take in the near future? One crucial factor to consider is revisions to earnings estimates. At Zacks, the focus is on how changes in earnings projections can affect a stock's fair value. If analysts revise their earnings estimates upward, it usually signals that the stock's fair value is higher than its current price, which can attract investors and potentially drive up the stock price. Currently, CrowdStrike is expected to report earnings of 98 cents per share for the current quarter, reflecting a year-over-year increase of 32.4%. However, the Zacks consensus estimate has decreased by 7.1% over the last 30 days. For the full fiscal year, the consensus estimate stands at $3.92 per share, indicating a 26.9% growth from the previous year. This estimate has been revised down by 5.8% in the past month. Looking ahead to the next fiscal year, the earnings estimate of $4.70 suggests a 19.9% increase from the prior year, but this projection has also been reduced by 2.8% recently. Given these revisions, CrowdStrike holds a Zacks rank of number 5, strong sell. This rating reflects the recent downward adjustments in earnings estimates, which, combined with other factors, suggest a less favorable outlook for the stock in the near term. But before we move on, we just want to thank you for watching this far. Revenue, surprise, valuation. Now, did you know that while earnings growth is a key indicator of a company's financial health, revenue growth is equally important? A company needs to increase its revenues to sustain long-term earnings growth. Let's look at how CrowdStrike measures up in this area. For the current quarter, CrowdStrike is expected to generate revenues of $958.66 million, marking a year-over-year increase of 31%. For the current fiscal year, the revenue forecast stands at $3.97 billion, which represents a growth of 30.1%. The estimate for the next fiscal year is $4.91 billion, indicating a 23.6% increase. In the most recent quarter, CrowdStrike reported revenues of $921.04 million, a 33% rise from the previous year. The earnings per share for this period were 93 cents, compared to 57 cents a year earlier. The reported revenue exceeded the Zacks consensus estimate of $904.82 million by 1.79%. And the EPS surpassed expectations by 4.49%. CrowdStrike has consistently beaten consensus EPS and revenue estimates for the last 4 quarters. Valuation is another crucial aspect to consider. It's important to assess whether a stock's current price reflects its intrinsic value and growth potential. Comparing a company's valuation multiples, like price to earnings, price to sales, and price to cash flow, to its historical values helps determine if the stock is fairly priced, overvalued, or undervalued. CrowdStrike currently holds a Zacks Value Style score of F, which means it is considered overvalued compared to its peers. This grade is based on various valuation metrics that suggest the stock is trading at a premium relative to its industry. Furthermore, TipRanks indicates that while CrowdStrike's Q2 earnings are anticipated to be strong, with an expected EPS of 97 cents and revenue of $957.8 million, there are mixed sentiments about the stock's future. Analysts project a 30.7% growth in EPS and a 31% increase in revenue year-over-year for the quarter. Despite this optimism, many remain cautious due to recent outages that may affect future performance. In the past 3 months, there's been more upward revisions in EPS forecasts, with 30 analysts increasing their estimates compared to 6 who decreased theirs. For revenue, 24 analysts raised their projections, while 11 lowered theirs. However, the outlook for the full year shows more variability. Analysts are divided, with 15 revising EPS estimates downward and 27 upward, leading to a projected annual growth of about 27%. Similarly, revenue estimates have 16 downward revisions and 24 upwards, indicating expected growth of 29.7%. The outages might lead to renegotiations of contracts, potentially impacting churn rates and overall guidance. CrowdStrike's guidance for the fiscal year is between $3.97 billion and $4.01 billion in revenue. Given the uncertainties surrounding the financial impact of these outages, it may be prudent to wait for more clarity before making investment decisions. Regarding Wall Street's view, 30 out of 37 analysts recommend buying CrowdStrike stock, despite 4 downgrades linked to the outages. The average price target, adjusted after the outage, is now $341.58, reflecting a potential upside of 28.16% from its current price. So, Before CrowdStrike's earnings report, investors should weigh several factors. The stock remains largely recommended by analysts, with an average price target of $341.58, suggesting a 28.16% upside potential. Yet, investors should be cautious about the potential impacts of outages on future results and guidance. Given these factors, how do you think CrowdStrike will perform in its upcoming earnings report? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about tech, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.